Okay, guys, let me just quickly explain what I was talking about when I said I'll share my analysis on GBPUSD and explaining what impulse and correction is, what you need to look for, and where we anticipate our price to go. Okay, so generally, this is the daily chart, and these are my current markings. We have a double top here. So this was a double top for GBPUSD. Okay, then what do we see? How is price moving here? Going to the double top, you can see that price is moving correctively. You need to be able to differentiate between impulse moves and corrective moves. Okay, this can be an impulse. If, as you can see, there are strong candles that are going down. This is a typical impulse, and a correction usually is a number of candles. You identify it with a number of candles moving in either a sideways direction, a falling direction, or a rising direction. But these are a lot of candles that you can identify that are not covering much ground in terms of going up or going down. So if you look at these candles, these are just a few candles, but they have covered so much ground going down. But these candles are a lot of candles compared to these, but they are covering less ground. Okay, as you can see, this is correction. What I want you guys to draw your attention on is the move from this part to this part. As you can see, these are a few candles compared to these ones. These are a few candles going to the upside, which is our impulse leg. So if we have an impulse, what we look for next is a correction. For example, here, I think I identified it just back here. Let's just have a look. Let's wait for it to load. Okay, so we can see that price has made an impulse leg here on the higher time frame. If I go on the weekly or on the monthly, this is just one impulse and a correction and another impulse going down. But this has moved in a corrective way. That's why it went up. Okay, let's just draw our attention to what we're looking at currently. If you go to the 4-hour time frame, we can see this impulse leg in a different way. Okay, as you can see, this looks like a lot of candles going up, but as we saw on the daily, this was a few candles going up, which is an impulse leg. Okay, but as you can see, moving from here to here, there are a few candles. Okay, there are a few candles, but it's powerfully going to the upside. But look at these candles. These are more candles than these ones, but they are not covering much ground going to the upside or to the downside. So this can be a correction. Okay, so this is our impulse correction. This is another impulse. So this is our current correction. Why do we usually say it's a correction? It's the way the price is moving. If it's moving slowly, then it is a correction. If it moves fast, it's an impulse. So if you can check here, we cannot say this is an impulse to the downside. Logically, if you have a look at this cannot be an impulse to the downside because price is slowly trickling down. Okay, this is how you identify a correction. So if this is a correction, usually we use our Fibonacci tool, which is this one. You place it at the low to the highest point, which is here. Okay, place it to the highest point. Usually price corrects to these ratios to 0. What's this? Let me just move it. 0 0.38, 0 0.5, 0 0.61. So price can correct all the way down to this level, 0 0.6 or 0 0.5, or come to 0 0.3, which is here. Okay, let me just remove this and just leave the markings that we have. So these are our turning points where price can come. But from what price is doing on our the way we trade with chart patterns, we can see that this correction has been longer, almost the same as this impulse. If you take this thing going up, okay, it's this height is almost the same as the how do you flip it? Okay, it's almost the same as this. Okay, so price can go down in this instance. Usually what we need are corrections that are not too long than the initial impulse. Okay, let's look at what's happening on the H1. Drilling down. I think I've explained to you what top-down analysis is and how to do it. Okay, so what do we have here? We have our impulse leg going up. We have our correction currently. Look at how price has fallen here. It has shown us a reversal pattern. Some of the guys entered their longs here. Okay, entered their longs here, anticipating price to go to the upside with their first take profit on this trend line. First take profit over there, then anticipating a swing to the upside. Okay, so price is reversed from here and it's now moving down. I was anticipating a rejection here to go long on this trade. Why was I looking for that? Let's have a look. Price was trickling down. We agreed that these are too many candles to say it's an impulse because there are a few candles just trickling down. This can't be an impulse. But look at what happens here. Just a few candles have covered much ground than these million candles that are here. So this is our impulse leg. We are expecting a what? A correction. I think I had drawn my correction like this at some point, expecting it to just correct for a bit and go up. But price has decided to come down to test some of the lows. So what I'm anticipating now here is to have a couple of rejection candles. If I have a couple of rejection candles, then I'll be willing to go long with my stop loss below this low, okay, because price can come for a double bottom here. Okay, so if price comes for a double bottom over here, we'll just take our price to go long from here. Okay, so what I wanted to tell you was it doesn't necessarily mean that price is going to follow our analysis. At times price will just come here, give us a reversal pattern to go up and still go down and hit our stop loss. So what you need to manage is your risk. When you lose 1%, that's fine. If you lose another trade 1%, that's fine. Eventually you're going to catch trades that are 1:4, 1:5, which are big trades, which will cover all the losses. So you need to be very careful with your risk management. That's what you need to concentrate on. Okay, so price doesn't usually do what we anticipate, because price does what it wants. We are not the market makers. The market makers do what they want in the market and we just follow what they are doing. Okay, so no one is 100% right when it comes to analysis. Just make sure you risk properly and use your edge. What is an edge? An edge is an advantage over it's a proven strategy or proven system that works in the long run. So if you lose like 5 trades and win 4 trades, you should be profitable. Or if you lose 5 and win 3 trades or 2 trades, you should be profitable. So if you have that edge, you know that probability says that if I lose 5 trades and win 3, I'm still profitable. So if you win 5 trades out of 5 trades, that's awesome. But in the long run, we work with the long run and we have to be patient to see these results coming. Don't rush the process, just accept the process of learning and you will always thank yourself in the end. I did a risk management video before this one, so you guys can check it out so that I go deeper in what risk management is and how you apply it on that video. So on this trade, like I said, either waiting for rejections that I'm seeing right now. So I'll wait for the H1 candle to close. Probably I'll go long on this one. If it rejects, then I'll put my stop loss just under here, probably 25 pips, and then look for first target here and another target on this high. Okay, then the rest I'll swing it up. But if it doesn't give me convincing rejection candles, I'll wait for it to come here for a double bottom. Then if it gives me rejection candles or a reversal pattern like this one, we take it from here. Let me show you. If it gives us a reversal pattern like this one, okay, if it comes down here and gives us a reversal pattern like this, there you go. I am willing to enter this trade to go up. Okay, so that's what I'm looking for. So you should be able to forecast what you think the price will do and make sure if price follows that, you just enter how you expect price to move. That's how you manage your trades and be able to focus on what you think the market will do. That's how you become a better trader. But all the same, we are all learning daily and we just improve ourselves. You have to be better than you were yesterday. That's the point. If you're better than you were yesterday, then you're moving forward. Don't complain. Don't say, this guy is just teaching us this strategy doesn't work. Don't complain, okay? If you think it's not working, just try something else. But be careful. Most traders jump from system to system. It doesn't mean that the system that you learned initially doesn't work. It's just your discipline and your psychology. You need to fix the way you think and the way you trade. Okay, don't fear being left out by the market. Don't think, oh, it's already going, so I have to buy it. For example, here, if you thought price is already going here and you bought here, your stop loss will be somewhere here. You see, now you are in drawdown. You see where price is currently. Imagine the emotions when you entered somewhere here thinking that the price is already leaving you, then it starts going down. This is drawdown. So you have to be patient and you have to trust your system and your strategy and your trading plan. I'll teach you guys how to do a trading plan soon. But for now, this is what I had for you today. Hope you guys understand it and enjoy. Let's keep fighting. Let's keep pushing the markets. And one day we'll thank ourselves for learning how to trade. Do not lose hope. Eventually you get a hang of it. Thanks a lot for watching the video, guys. See you on the group chat.